The following was recorded in front of a live studio audience at the Studio 21 Podcast Café. This is the United Podcast Network.
Welcome to the Stock Market Authority Podcast. I'm Bakes, Kevin Baker. I'm going to teach you how to make money in up and down markets. Very few podcasters or coaches cover this. I'll show you how to lock in profits and minimize losses to make you a better investor. So once a week, you're going to know what's going on in the world and the stock market. Welcome to the Stock Market Authority Podcast. Today we're going to talk about a very apt title. What the hell is going on here in the stock market and apparently with technical difficulties? Anyway, Mailbag. We're going to go through that and talk about Tesla. Yeah, we're going to talk about Tesla again. And Shake Shack and other things that the Share Scoops community has asked about. And we're going to go through the Stock Market Authority portfolio. I'm the only podcaster that I see with real trades, real investments, showing the good, the bad, the ugly, as we try to make money this year like we did last year. Our goal is to try to make money every single year. So that's what we're doing. But right now, today's top story.
Beneath his stormy surface flowed the warm tide of compassion and kindness.
What the hell's going on out here? Everybody's grabbing out there. Nobody's touching. Just grabbing, everybody. Grab. Nobody touching.
I love that clip. I watched it 100 times if I've watched it once. That's Vince Lombardi, obviously, the legendary coach of the Green Bay Packers, Hall of Famer, legendary. And what the hell's going on out here? I think that's applies to the stock market, certainly. We're stuck in the middle with you. And we're between this level that you see here on the SPY, the S&P 500. 418 is resistance, the lid, the ceiling, if you will, and the floor is 396, that 200-day moving average. And it's pretty remarkable that we've stayed in this range for as long as we have. We've had the fiasco of the debt ceiling, the pompous politicians coming to the podium. See that alliteration there? I did it again. The debt ceiling talks keep going on, and everybody and his brother says, there's a lot of posturing, but at the 11th hour, they're going to get something done. That's consensus, and my suspicion is that's exactly what's going to happen, but there's that 3% chance that it doesn't happen, and there's some sort of technical default, and then I think you see we take out that 396 to the downside. So that's my thought on that particular topic. We just came through earnings, and earnings were down. I mean, so where the profits are shrinking in the aggregate for the S&P 500. But the expectations have been brought down so much that people kind of yawned and said, okay, they're down, but they're not that bad. And they applauded some of the big guys' earnings. We've gone through that, but we couldn't that it wasn't enough to break out of this range that we're in. And the earnings season is pretty much over. We've got the retailers going on right now. Home Depot just coughed up a horrible number yesterday as an example, which heightens the anxiety over the housing market, which I've had. The Fed meeting came and went, raised interest rates 1/4 point, and the consensus is now that they're done. And so we're going to pause for a bit. We're not going to lower rates, but we're not going to raise rates going forward. CPI came out at 4.9%, and that's obviously down. It's been down 12 straight months. It's not 2, but it's closer than it was at 9.1 not too long ago. And so the market kind of takes all this and says, we're just going to stay here until you tell us what to do. And as investors, that's not a bad thing. Sitting on your hands is appropriate a lot of the time. So I'm watching this closely. We're at 418 on the upside, 396 on the downside. My personal view, and again, we went through this last week, I'm not predicting anything, but I'm leaning, okay? So I would say I'm about 55% we're going to break to the downside because I think the consensus is no debt ceiling problem, earnings okay, Fed's done. And if there are any negative surprises there, I think it takes it down, which seems like it's more likely to me. The other point I want to make is look at the volume here in the lower right. When I look at this, and this is why I love charts so much. This to me shows distribution in aggregate. The market is the big institutions are saying, overall, I'm going to be selling on the down days. The down volume is exceeding the up volume, and it suggests to me a tired market. Institutional investors are full of the larger caps, and they might be feeding some ducks. So my next chart here is Google, and Google. I mistakenly thought that this was going to be. I still think this, frankly. ChatGPT, you can say that it isn't that big of a negative, but you can't say it's a positive. So Google's got 93% share in search. That's a lot of fun going from 0 to 93. But the problem is then everybody comes after you. And in this case, it's Microsoft and OpenAI's ChatGPT coming after you, and that's formidable. And so if that market share goes from 93 down to 83, I think it's going to hurt their search business, and they're going to have to spend money to respond. So, but earnings came out. They were a positive surprise. And then more importantly, their AI day, artificial intelligence day, the CEO used the phrase, it felt like 107 times. I didn't count them all. But so you had this bump up here to 120, which as this line shows here is pretty significant resistance. I think it's going to have a hard time getting through that. But the volume was pretty good on the upside. So there's clearly some people here. So here's my take overall, that you have 6 big stocks that are AI focused, Google, Microsoft, et cetera. They're getting some upside volume, some additional buying. Now, as I've described before, if you're an institutional money manager and you're tracking the S&P 500, let's say Apple is, or let's say use Google. Google is 6% of the index. I'm making that up, but I'm going to be close. And so, money managers are going to be 5%, maybe 7% in Google. And if they get skittish about the debt ceiling, et cetera, what do? They go from 6.1 to 6.3, top it off a little bit. And so you see these 6 names levitating, but you don't see the market overall doing a heck of a lot. I think that's what's going on. So my answer to Vince's question is what the hell's going on out here is that we're stuck in this DMZ. With all the news that we had, that didn't break it out. I think we're going to get some news that breaks it to the downside. That's my guess. But again, I'm not predicting. I'm willing to take what the market gives me, look for ETFs that benefit no matter what happens. More on that later. And stay tuned here, and believe me, and stay tuned over the course of the week as I bring out my new ideas that rise through my work. Please do me a favor. Go to my website, stockmarketauthority.com, sign up for my free newsletter, and especially check out the video where I show you how to sell. I am the only podcaster I've seen out there that focuses on how to sell. Everybody else wants to tell you what to buy and when to buy. I tell you how to sell, when to sell, and boy, that's important. Ask the First Republic people. And if you enjoy the show, get value out of it, do me a favor. Please go to your phone and click on the share button in the upper right-hand corner. And that is today's top story. Now it's time to check the mailbag.
There's a letter in your mailbox.
You got mail.
Chrissy is trigger happy this morning. More caffeine, please. Thank you so much. Appreciate that. Bill from Boston called in and said, what does Tesla's new CEO mean for the stock? Linda Yaccarino, thanks for the question, first of all. Love that. Linda Yaccarino is NBC Universal's ad lady, if you will. The Velvet Hammer is her description, if you will. And it's a positive for Tesla, okay? Elon folds up his cot, doesn't sleep at Twitter anymore, and he goes into his cot at Tesla more often. Okay, great. That is a positive. Twitter's a mess. So it's I guess a mild positive for Tesla. I always say That makes sense intuitively, but let's see what the market says. And the market liked it for about an hour, drove the stock up, and then ended the day on the downside. So Linda has a big job at Twitter going to the Procter & Gamble advertising people and saying, yeah, Elon's nuts, but we have 50 million eyeballs, and please advertise with us. And Elon's going to be involved, but less so. We'll see how that goes. So I think that it's a positive, but I don't think it's enough of a positive to make Tesla a buy. The annual meeting was last night. Kind of a big yawn to me. I didn't see anything that got people excited, and the market is telling me that. The market's up Tesla's up about 1% today. He had an exclusive on CNBC at 6 o'clock last night. I didn't hear of any wonderful revelations from that would be particularly stock moving. Barron's had a story this past week talking about how a Starlink IPO could put cash into Elon's pocket and diminish the need for him to sell Tesla stock going forward to fund the Twitter debacle. That makes sense. So that's a positive. But when you start putting all these positives on and the market doesn't care, I come back to the same things I've been talking about for a long time, to my share scoop people and everybody else. The chart's lousy, number one. The stock went from 400 to 100 to 200. So, okay, that's a bounce. But there's clearly something wrong with the business. The PE is 42. GM and Ford trade at 4, 5, 6 times, depending on the day. It is a car company, not a technology company. The business has gotten much tougher. Same sort of thing as Google. Going from 0% share to 70% share is fun. But now you're at 70% share, and everybody and his brother, Chinese, Germans, U.S. competitors, are saying, we have an EV too, and some of them are getting pretty damn good reviews. And Elon has angered a lot of tree huggers who were his natural audience in San Francisco and elsewhere. So I think the stock goes down, and I implore people, share scoops people too, especially if you have an environmental bent that you want to vote with your wallet to reduce carbon and improve the environment, do not do it here. There is nothing noble about losing money in Tesla as you try to improve climate change. I don't buy it. And I certainly don't buy Tesla. Am I being vague again? Okay. Now, John from New York texted me, what does the new activist mean for Shake Shack? And I haven't looked at Shake Shack in a while. This was helpful. Engaged Capital came in and said, we have some ideas on how to increase shareholder value, drive the stock price up. And Jeffrey Lawrence is joining the board, apparently with Daniel Meyer's blessing, legendary CEO and founder of Shake Shack. And Lawrence has 20 years of experience at Domino's, was the CFO in his last gig there, so he has street cred, to put it mildly, and the stock likes it. And I like this chart. This is what I'm looking for all the time, so I picked this because I want to be constructive on some names as opposed to saying sell stuff all the time. The volume picks up as it breaks out into new highs. That's exactly what I want to see. Enthusiasm. Maybe the shorts got a little spooked and said, "Hey, we've overplayed our hands here. We've got to buy." But this is clearly a constructive chart. Look at the volume on the lower right. That's exactly what I want to see. The caveat I have here is that if these numbers are right, it's going to earn 25 cents next year. The stock's at 70. The multiple is nuts. So I don't know. I have a hard time believing that the analysts are so asleep at the switch that 25 cents turns into $3 in earnings next year because of some incredible new strategy that Engaged Capital brings to the table. Anything's possible, but I think it's highly unlikely. So if you're a Shake Shack holder, I would hold it. Watch my sell discipline. I'll do the same. But I think it's a clear positive that there's some change happening. The valuation gives me pause. I always defer to the chart first and the valuation second. But this is, eye-watering, multiple levels. Great burgers, but I'm not hold the stock, but I wouldn't be married to it by any stretch of the imagination. Tim from New York emailed me, what do you think about Inovia? EYEN is the symbol. And this was also featured in the Share Scoops newsletter a little while ago, which I recommend. They got approval for a better eye drop to dilate pupils for diagnosis. And I say that, and I kind of say, how big is that market? How much better is it? What can they charge? And now the stock loved it, okay? Loved the approval, went parabolic. Parab was usually correct pretty sharply, and that's what we have here. And I think I know why, and I'll go into a little bit about biotech generally. But this company is losing money. Yes, they have an approval. They've got a phase 3 for farsightedness that they're doing, which is costing money. And then they they like the approval, and then when the earnings come out and the conference call comes out, they say, we lost $5.7 million, and we've got $18.5 million in cash. So we can all do that math. The company is burning to the point where they're going to need to raise money soon in order to stay in business. So I think that's what happened. Got approval, got excited, and then the cold hard reality is we need more money to get to the finish line with our other products, and there's going to be a capital raise here, selling shares, and that's what knocked the stock down. My other point with biotech is, frankly, I'm not good at it. I had to do it because, again, in the money management world, there's a certain percentage of the index that's in biotech, and you got to be there. So let's say it's 4 or 5%. You can be 4 or 10 or 6. Okay, you don't want to be a hero and be 0 or 10. And so what I would do is I would buy 50 basis points, 8 positions, and hope that I was right on 2 and wrong on 6, and it all worked out. I ended up being wrong on 7 most of the time. And the problem with biotech is it's binary. So you either have a positive result in a phase 2 or a phase 3 trial, or a negative result. And if you get a negative result, it seems like you go down 60. If you're right, you go up 15. So, and then the other part of it is advisory committees, AdComs, and FDA meetings. If you get a positive guide from an AdCom, if you get approval from the FDA, people check off the box and say, we're going to de-risk this, here's a product, here's a revenue line, and it's going to obviate the need for cash raises down the road. It's a tough gig. Because, again, when you're wrong, you get absolutely crushed. And when you're right, it doesn't feel like you make as much to go up. There isn't really a good ETF on the small cap side. The biotech ETFs out there are really slanted toward the Amgens and Biogens of the world. So I'm not wild about it. But and I'm kind of putting my bias in there. I just think there's other things to do than biotech right now. But hope that's helpful. Give me your comments and feedback. That's it for the mailbag this week. If you want to write into the show with any questions or comments, please email me, bakes@stockmarketauthority.com. Even better, leave me your voice recording and we can play your question on the show. Let's take a break. When we come back, we'll take a look at the Stock Market Authority portfolio. I'll give you this week's Bakes Takes. You're listening to Stock Market Authority. Hang in there. We'll be right back.
Do you want to become a better investor? Do you want to learn how to make money in both up and down markets? Then you need to go to stockmarketauthority.com and sign up for our free newsletter today. Stock Market Authority is run by award-winning investment manager Kevin Bakes Baker. His aim is to save you time while teaching you how to be a better investor. Bakes saves you time by diving into all the latest stock market news and information so that you don't have to. He reads all the latest articles, analyzes the charts, and listens to all the relevant podcasts. And then once a week, he gives you a breakdown of what's happening in the market. Stock Market Authority is constantly outperforming the S&P and the HFRX. Bakes is going to share with you his weekly stock observations. He'll give you concise insights and show you how to lock in profits and minimize losses. Stock Market Authority is making money in up and down markets. Wouldn't you like to do the same? So join now and let Bakes show you how. Head on over to stockmarketauthority.com and sign up for our free newsletter today. That's stockmarketauthority.com, making money in up and down markets.
We're back, and we've been talking about what the hell is going on out here. Thanks, Vince. And but now it's time for the Stock Market Authority portfolio. And again, I might be masochistic, but to get you on board with what I'm doing, I figured the best way I could do it was show what I'm doing with real money. And you can decide, hey, this makes sense, it works, or it doesn't. And so far it works. We've made money every year. Very proud of that. We own 8 ETFs right now. I'm looking for 2 more. Our portfolio, as you can see, is very unconventional. Our biggest position, or our number one winner now, is Argentina, ARGT. There isn't a portfolio manager out there that has 10% in Argentina. Platinum, I think, looks terrific. PLTM, we own that. We're Mexico and gold are in the 3 and 4 spot. And then we have crypto, Ethereum, Bitcoin, both the Grayscale Bitcoin Trust and the futures, BITO. Talk about that a little bit more, especially Ethereum. And Nigeria is bringing in the last position. And that's my biggest loss, 11%. And what I do is, if you're new to the show, anything that's 15% below cost, I shoot it. And I never think about it again, and I just dispassionately go on and find winners to make money. I just found that if you cut your losses and let your winners run, it works. It's a lot more fun, and you don't spend a lot of time, going through your mistakes. Since we started this, and I'll share this over the course of the week, we're beating the hedge funds by 3.35 times. So we clearly are onto something here. We've made money every year. Most hedge funds have not done that. They had a very tough year last year. Now, it's not all roses. This year we're down 13%. Market's up 8%. I'm not happy about it, but I've got 7 months to go. I've got 2,000 charts to go through to find 2 or 3 more to drive performance, and I like my chances, frankly. This next chart is the Grayscale Ethereum Trust, and I can't be more transparent. I talk about winners and losers. Well, so far, my sell discipline kicked off in this one. We closed below the 200-day, and the 200-day started going down. And so that I just one morning said, these are gone. So I sold 2/3 of it because I do think this can turn around. I also want to point out that I've added a new rule to my list. This gets a little wonky, but bear with me. I thought the 50-day was going to come up through the 200, and I anticipated that. It missed it by this much, and so from now on, I'm going to wait for that kind of confirmation to see a positive trend change and reversal. But again, I can't be more transparent. I'm showing you everything that I'm doing. I'll go through recent improvements in my newsletter and my social media posts. Please subscribe, follow, and share. And that's how we're invested right now on May 17th. I can't believe that May's already gone. Let's get into this week's Bakes Takes. And my take here is really straightforward. When you don't know what the hell is going on out here in the market, don't do anything. And I know there's some people like to trade frequently and be frenetic, and I think sometimes the sitting is where the money is. I know I do that. I went through way too late last night. I went through my most promising charts, and I didn't find anything. So I'm not going to trade anything today. I'm not going to buy anything, and you don't need to. You only need to have a few big winners to make up for your small losers. And I want you to really kind of reverse your mentality, because I talk to people all the time, and it's, I can't sell, I can't take a loss, it could bounce back. It doesn't work. It just doesn't work. And you know it doesn't work because you see it in your own portfolio. So hold on to your winners, cut your losses, and when you don't know what the hell's going on and the market is stuck in the middle with you, don't do a damn thing. Those are my Bakes Takes. And as we close out today's show, I always like to end with some levity after I talk about debt ceilings and interest rates and CPIs and earnings misses and all that stuff. This is, okay, Mom, Dad, there might be some salty language in this, all right? I didn't check it all of it entirely. But this is Mark Normand and Norm MacDonald and others with 33 stand-up jokes to beat stress. It's about half an hour's worth of comedy, and play it as you're walking the dog. Hi, Murph. And working out, and I think it'll bring a smile to your face. That's it for today's show. Please go to my website, stockmarketauthority.com. Please sign up for my free newsletter. Please take your phone out right now, do me a favor, and click on the share button in the upper right-hand corner. I will see you next week. Keep those cards and letters coming in, boys and girls, and I will see you soon. Take care. God bless. Bye now.
The views and opinions expressed by the hosts, guests, or callers of this program do not necessarily reflect the opinions of the Studio 21 Podcast Café, the United Podcast Network, its partners, or affiliates.